Democrats and Republicans are locked in the staring contest with the potential U.S. government shutdown back in the headlines. The government will officially shut down and run out of funding on midnight on Tuesday, September 30th, unless Congress can agree on a short-term funding deal. But here's the kicker. Congress is actually out of town with no plans to return early until Monday. So right now, there are no signs of a deal. And the White House actually upped the stakes by warning, threatening layoffs as a shutdown were to happen. Now, what does this actually mean for the U.S. economy? We know that millions of federal workers would go without a paycheck. Essential workers like airport security officers would still be required to show up, but without pay. And yes, thousands could be laid off as the White House threatened. It's disruptive. But here's the real big question we want to know. How will the markets react? History tells us the impact is surprisingly limited. The last full shutdown was in late 2018, and it lasted for 35 days. Stocks sold off ahead of it, but they actually bottomed out and stabilized once the government reopened. In 2024, we came close again. Markets sold off on shutdown fears, then stabilized once a deal was struck. For the dollar, it's kind of a mixed bag. In 2022, the dollar index dipped to a 10-week low during the shutdown. But in 2024, the dollar actually rallied when the shutdown was avoided. The bottom line, shutdowns aren't usually a big deal for the markets. We've been down this road many times before, and chances are, like before, there'll be a last-minute deal. What do they want? The Republicans want a clean short-term funding bill with no add-ons, which is par for the course. Democrats want to use this opportunity to win back healthcare funding and reverse Medicaid cuts. But in the end, history suggests that cooler heads will prevail. So if you're trading, don't overreact.